Hello everyone, this is Juan Sarmiento and today is Thursday, August the 16th. This is the first of a new series of webinars that are open to everyone that has a YouTube account, I guess, or the ability to come to the Put Code Genie channel and participate. So make sure that you subscribe to this channel and click on the bell so that you are notified of any new videos coming up. In this series, I'm going to show you the Genie trade. I have been keeping this paper trading account for a long time, and I'm going to show you what I have done so far this year, the trades that I have in place right now and how to modify them, give you the basics. And as we go every week, I'm going to enter new trades, possibly modify the ones we have in place, and teach you about this way to trade. This series is yet to be determined how long would I be doing this. It is possible that if I get a big audience and a large number of participants, that I will continue on indefinitely. So be sure to subscribe so that I am encouraged to continue this on. Okay, so let's talk about this. What is this paper trading account? Well, in essence, it's an account with fake dollars. Just you can go to the Thinkorswim platform, enter the simulated trading account that you, as a member or as if you have an account on Thinkorswim, you automatically get one of these. So I'm going to show you how to utilize the platform at the same time to play with the Genie trade. If you have not any experience with options and would like to get some basics, let me know. Send me an email or a message in the discussion below, and I will let you know how you can access the videos that I have already created in the past on the basics of options so that you get up to speed. Okay, so this is the account here, and so far this year I have made quite a bit of money. So let me show you how to get that. Right now the account value is $89,283. I started this a couple of years back with $50,000, but this year has been particularly good, which is shocking given that the market dropped significantly. With a big spike in volatility, we benefit as Genie traders. So let me just show you. Let's go back to the beginning of the year. So I click here, essentially go to the account statement and click here on days back, and here enter the date of January 1st. That way we will get the situation, the account status at that particular time. So it is all nice and clear. Okay, so right here it says that at the beginning of the year we have $58,000. That means that in the previous couple of years I had made only $8,000 out of a $50,000. So it's not bad, could be better, but this year has been dramatic. So let me just grab a calculator here, and I'm going to clear the memory and enter the account liquid value at the time, January 1st, so that we can calculate how far we have gone this year in terms of percent. Okay, so I'm going to save that, $58,000. And right now we are at, this is the account value today. Okay, so let's calculate $89,298.17. We subtract what we just entered in memory, so subtract memory recall, and that gives me 31,000. 31,000 is what we have done so far this year. So right there I triple or quadruple, no, less than quadruple what we have done in the 2 previous years because the volatility spiked. Okay, so let's calculate that in percentage. So divide that by the original valued early this year, and here we have 53%. 53% is what I have in terms of percentage what this account has made. Wouldn't you want to have done that? So from 58 to 89, almost $90,000. We can go back to the beginning of the account, but I'm going to leave that for another day. I'm going to explore all these trades. I don't have any new trades today, by the way. If you have followed me before, or if you're a regular member, you would like to know whether I'm entering new trades or not, and I'm not. Okay, so I didn't find anything today, but that could change. And I'm going to trade this account only once a week. So that's the reason is you saw me trying to trade every day. That's so cumbersome to have to worry about spend an hour selecting trades and then close the ones you didn't have. This keeps a very tiny number of trades, and it helps us that way to focus on what we have. So let's reset this, reset the date to today. And so today was a good day. We have good profits on Apple and Salesforce. Okay, so let's say we want to see so far this year my trades. Let's say Salesforce. No, let's start with Apple. Let's do it alphabetically. Okay, so I'm going to go here and select so far this year. So I'm going to say 120 days back, just to put a number. And that will show me all the trades that I have so far on Apple. Okay, starting on May the 7th. That was this trade at $105. And say, let's analyze that. And here is what the trade would be. But that's not the only trade I made. I also did what is called a rollover. So you can see that I have September and June. September is the back month, and a Genie trade consists of 2 long-term or back month straddles and 1 front month short straddle. And so this June it helps me in case the stock does not move at all until June arrives. And then what do? I just roll it over, which means I close the Junes at a low price and sell the next month, July ones, at a higher price. So let me show you. I can click on this and say Analyze Trade, and then that brings it to my Analyze chart here. And this would have been what the trade would look like, but that's not all that I did, okay? Once again, I go back to the Monitor tab, and here you see that I essentially sold one of my long calls expiring September and bought one at a higher strike price. Why did I do that? Well, if the stock has moved substantially from 305, the strike price that I entered it, to 100 to 304, well, then the 305 is worth $45 a share, which, so you multiply that times 100 is $4,545. But the higher strike price has a lower price, and so we are entering this roll up. Is called a roll up, meaning I'm taking one of my outstanding calls. Remember, if we have 2 long calls and 1 short call, then we have 1 outstanding long call, meaning I have 1 more long call as opposed to the short calls. And so that long call can be rolled up, and that's what I did here, which means I'm taking my 105, taking it out of the commission because it's now accumulated plenty of profits, and I am buying at a higher strike price. So my delta, meaning how many dollars I make for every dollar that the stock goes up, the delta gets neutralized. So it's a way to take profits and reduce my risk, my exposure to this trade. So let's say Analyze Trade. And obviously, when you are in a bear market, this is something, even if you're not in a bear market, you want to take your profit as you go so that you reduce your risk. Okay, so that's what I did. I rolled it up. And now I have that 100, I have my old trade as you see it here, minus one call, and we have a fifth leg, which is my 340 call. Let's continue on. And then I did it again. You see here, like I said, well, now my 340, since Apple has been going up significantly, now it turns out that my long call that I bought at $22.95 is worth now $51.05. So instead of risking it, leave my exposure to the long calls. No, I just take a profit in case the market reverses and goes down unexpectedly. So this is a way to reduce my risk as we go along. And if the market decides to take a dive like it did back in January and February, I would do just great. And this is the way that I made money even though the market went significantly lower. I'm protected. Okay, so here I did a roll up again. I sold at 340 calls and I bought a higher strike price at 390. Let's analyze that. And now this is what we have right now, I believe. Let's go back to the monitor tab here. And this one, I sold it again. I sold at 390, but this time I didn't buy anything higher. Instead, I opened a new Genie trade. Okay, so that was on the 31st. What happened on the 31st? Let's look at the chart. On the 31st, Apple reported earnings. The stock jumped above $400, and I said, wow, this is the time to take advantage of that. By the way, they said, or the company said, that they were going to split the stock 4-to-1, which means that one share becomes 4, and the price of the stock will be divided by 400 in this case. So it will go close to 100, a little over $100 a share. Okay, that doesn't matter to us, well, except that perhaps we're going to have more options to work, and our commission will be slightly increased, but not by much. Okay, so here first I close that long call, analyze trade, and here's what we have right now. Let's look at the profile, the risk chart, and this is what it looks like. It's pretty bearish, right? But obviously the stock could drop if there are very, very bad news and the market begins to tank. It won't matter because I have now locked in my profits, which is $1,787. Okay, and so the calls that I still have remaining calls and puts, and I'm going to show them to you. Let's show you here the ones that are 305. I have one short call and one short put. Okay, that's a strangled. I mean, a straddle that is doing poorly. It doesn't matter because I have the long straddle here. 2 long straddles plus 1 short put. So this is a very bearish trade, but it stays there. It doesn't bother me in any way. Okay, why? Because I used the cash that I had in excess and enter a new Genie trade, and this was it. So let's add almost $80.90, and this is what I have right now. So let's select them all, and this is the new trade. It has a delta of 17, so it is equivalent to having 17 shares of Apple. Okay, and that's what we have right now. If I wanted, I could do a roll up. I would take this long call, and you can see that I have two long calls and one short call for that 450. So I can roll it up again, which means I would close, I would say analyze rolling, and here it will be, and let's analyze that. Okay, so I go down here. These are all the trades as I have entered so far. So that's perfectly okay. It's a simulation of what we have so far. But here is our 410. We're going to sell one of them. No, 20 November call. And I'm going to buy a higher strike price with the same expiration. So what would be the higher? Well, it is right now we have the 456 is the current strike price. Okay, that seems like a lot of money. So I'm going to roll it up to $450, even 55. Let's do the 55 and see if they have that. No, it's not traded. Or you can do the $460. Oh, that looks great. Okay, I open it up and I change the December to November. There. And that gives me a credit of $28.82 times 100 is $2,882. So that frees that much more capital for me to enter new trades. Okay? So I'm going to do just that. So I'm rolling up my Apple share, Apple options. And you see it here on the activity and positions. Right here is entered, and tomorrow, hopefully, it will get filled. Let's analyze that to add it. And so this is what we have so far. Let's go to the Monitor tab and go to Account and Statement here. Let's reset here. And here we select Apple, and this is what we have had in profits so far, $4,313. And the market value of my position is 10,000. So if you get 3,000 out of there, we are going to reduce our position to $7,000. If that seems like a lot to you, it is not. All my positions are at the entry 10% of the account position. But my risk is about 1 to 2% of the entire account. So we will study this as we go. I will talk about it, the total risk and so on. But for now, I just wanted to show you this Apple trade. Let's see what about this CRM, which seemed to have done well today too. And let's go back to the beginning of the year here. And enter CRM here. It's very important to enter CRM. So that is limited. Oops, no L. Okay, it says 8 fills. Okay, so you can see here, I started this trade back in January, and I think this is probably all closed by now. Yes, so let's ignore that. That's my previous trade on that. But here's what we have so far. We have a July, September, okay? And you can see here that I did a rollover. So let's analyze this, okay? Analyze. And then a rollover. And what I did here, I roll over the calls, but I added the put. The short put was out of the money, so it didn't matter at the time. So I just did this three-leg rollover, which happens when your puts that are expiring will expire worthless. You are very secure. That means the stock has moved up significantly. And let's do that. And here is where we are right now. You can see that If the stock moves strongly, then we have indefinite amount of profits here. Obviously, I don't just sit there and wait until something bad happens. I take my profits as we go. And how do we take the profits? By doing roll-ups. In this case, you can see here that the position, let me just show you here. Let's analyze that. And you can see that the original trade was 4 long calls, 4 long puts, 2 short calls and 2 short puts. And so here what we did is we took those outstanding calls. The outstanding calls are 4 minus 2 equals 2. So we have 2 more long calls than shorts. Okay, and that is the September 170 call. And what I did that now is I closed that 170 calls, and I bought at a higher strike price. Now the stock has moved to 206, and my long calls are at 200, so I could take further profits if I wanted. Okay, let's take a look at the chart. And in this case, it looks like it's only the beginning. It's making this big move, but earnings are coming up on the 25th. So what I'm going to do is I don't want to go, sometimes I do, but most times I don't want to go over the earnings. If I believe that the stock, that I have enough profits, I could close the position. I usually do. But sometimes, occasionally, I leave the position if I can neutralize the deltas. Okay, so right now my deltas are 78 here. Okay, so how about if I did another rollover? This time I would sell what I have, which is the 200, and I'm going to buy a higher strike price. In this case, let's say 210. And that will give me $5.57, not a whole lot. If you want to, you can go to a higher strike price, and that's not traded. If we go to 220, it probably is too much. And you see, yeah, that's okay. The deltas are 220, but for this 220 to make money, it has to move a lot. The alternative is to simply sell one of those 220 calls. Just sell one. Here, the 220 say analyze closing, and let's sell just one of them. And that will give me $14. So how is that different? Well, let's do one at a time. So look at the deltas, I think that's critical, and look at the Vegas too, which is the volatility profit or risk. And so we have $78 for the delta and $127 for the Vegas. So if I sold just one of those calls, my deltas are reduced to only 15 and my Vegas to 100. Okay, and that looks actually very nice. It looks actually better than the alternative. But let's look at the vertical again and see for real. 20, yes, about the same, but the Vegas are a bit of more exposure. Also, if you sell a call, you're actually reducing the number of options that you have, so that reduces your commission a little bit, not a whole lot, but it used to be that was a critical thing, but not anymore. Okay, so I'm going to sell just the one call. I still remain bullish because the deltas are positive, but if the market tanks, Vega will increase. Vega, the volatility would make my position increase and I will make money. Don't worry about if it is too much right now. There is plenty of time and you will learn a whole lot by doing this exercise. So right now, this is what we're doing, okay? Think about, it's like learning a language. You know, at first, it all seems like Chinese, okay? But eventually you start seeing the signs and you understand it's a very slow process. but it's a very profitable process in the end. So stick with me. Okay, let's look at what else we have. What other positions? Let's look at Costco quickly. Okay, Costco is just the one, no rollovers happening. So let's analyze trade and see where we are. Okay, we are right here. My deltas are negative in this case. And the next expiration is on the 14th, and that is a week from today. And so what happens a week from today? Well, we want to actually do a rollover. Why? Because we don't want to find ourselves next week too exposed. So because we will be talking again on Thursday next week, it is a good time 1 week ahead to do a rollover if that's what you want to do. Let's look at the chart. And as you can see, Costco has been going up significantly. So I'm going to do my rollover here. And the rollover, with a rollover, you get cash back. Essentially, that's what it is. Analyze rolling. And in this case, I'm not going to go to August the 25th. I'm going to go 1 month ahead. So it will be September 11th or September 18th if you prefer. And you can see the delta become positive. That's great. So let's do, I'm getting $530 times 2, $1,000 back. If you want, let's look at the Costco position here. And it's 9,000 is the cost plus profits, whatever, 9,000. So my rollover gives me back some of that money. And I can use that for other trades. In essence, it's the same trade, only we took some profits from the delta movement, from the, let's say, the theta, that means time passing by, options decrease in value, and that's the front month. It helps me recover some of the cost. Facebook, okay, this is the same kind of thing. I'm just not going to spend too much time on this one. I just want to let it be, okay? Next week we'll deal with that one a little more. Okay, we have Monster. Okay, I think I have to look at this one here. Yeah, making new highs after they reported earnings a couple of days ago. That's great. Let's look at the monitor tab. And I started this trade back in May, and then I did a rollover and another rollover and a roll up. That's what I did. Okay, so same as Apple, essentially, okay? We started our trade, did a couple of rollovers, and then we switched 5 of my 65 calls for 80 calls. And that gives me a credit, okay? Gives me a big credit. And now my calls are 80. My strike, you can see my deltas are pretty high at 314, and I'm here. Let's look at the entire position. Let's analyze and analyze and analyze, and that gives me a very good estimation of what have I done so far. And here we are. My profits on this trade is $314 so far. No, here, actually, a whole lot more than that. My deltas is still 314, but my profit is 1,900. So what I want to do is perhaps roll up. That wouldn't be too much from 80 to 83, but I can certainly sell one of my 80 calls. Just let's see if we can do one right here. It cost me $255, $2.55 times 100, $255. Analyze closing. I'm going to close one of them, and the price is $5. And doing one of them reduces my deltas from 300 and whatever to 245. Still too much. So I'm going to sell another one, and that neutralizes even further. If I do 3, that's 100, and that's more acceptable to me. Why I do that? Well, because the market could drop tomorrow, and if it drops 4,000 points in the Dow, then I have to kiss goodbye to my profits. So I have to take my profits. I'm still ending up with a delta positive. So let's take our money out of the trade. And if we need to, we could enter a higher strike price. I don't find the need for that, especially right now. Microsoft hitting a new high as well. And we can enter a trade on that. I haven't done the analysis, so we'll leave it for next week, okay? Oracle, that's moving down. And here, August 14 is the next, and that's next week. If you take a look at simulated trades, it tells you right here we are 8 days. So 7 days really is the cutoff point, but that's tomorrow. Tomorrow there will be 7 days, and so usually I do my rollovers when we have 7 days to expiration or less. I don't want to go further, closer to expiration than that. So let's do analyze rolling. And you can see that December 55 is my back month. So there's plenty of rollovers for me to do. But I'm going to do it to September the 18th or September 11th. Let's do September 11th, okay? And that gives me $239 times 6. So it's something like $1,500. And let's send that off. And the last one is PYPL. And let's quickly look. I see 145, 145, so I have 2 pieces. Here is 145, 145. Okay, so I had 4 long puts, 2 long calls. That means I rolled it up because I enter a new trade here. I decided to close my calls there, completely non-risk, but in case this market goes down, I still have the 145 there, just in case. It doesn't bother me at all. So I already took all my profits on that one, but the 195 is this, and I don't want to change any of that. Okay, the August call is expiring tomorrow, which means that if I let it go, I end up with 200 shares, which I don't want to hold. So I could close that leg. Okay, we have September. Yeah, I'm going to close that. That portion of the trade. And analyze closing, double diagonal. Here it is, 145. I didn't do it right, so let's try that again. You say analyze closing and then identify the double diagonal that has 145 for all of them. Great. But we have 4 puts, 4 long puts. So let's customize that. And on the put side, September, I'm going to sell 4 puts. There it is. And that ends up flat. So the way to verify is always make sure that this line is flat, because those are all the 145s that I'm getting out of. Confirm and send, and we're going to get $392 back from that. Okay, so that's it for today. This is just an example. I'm going to manage this account. That's the purpose of this webinar. And I'm going to enter trades, modify trades, and give you a very good idea of what this. My only request to you, I need no money, not yet anyway. All I need you is to subscribe, to become a part of the community here. Be sure to put all your questions um, in the discussion below. I'd be happy to answer any questions. And let's try to create a community here on YouTube. And I'm counting on you to let's grow that membership. Please give me a like. Please subscribe and share this with your friends. Share this video with your friends that are traders. And let's create this community with your participation. So thank you very much for now, and until now, next Thursday. And remember, this is only being traded once a week. So trade once a week and sleep well at night. That's my motto. Thank you very much, and see you then. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.